So it's a price reversion setup that I trade almost every day. This is gold futures, of course, trading Topstep combines. I was actually in 5 contracts here, but it was a bit too much risk, so I changed my mind, took my contract off here. So and now we have broken the structure, obviously. We're looking for the continuation of this breakout. Usually when a break of structure happens, simple, straightforward price action on candlesticks tells us that whenever a breakout happens, wait for the retest of this candle and then wait for price to reverse that retest, come back down and enter short. This is what a normal trader would do. They would enter short here and they'll be in from here. They'll have a higher risk than me. But because mine is a mechanical strategy here with which I'm on this trade, I didn't have to wait for those retests. I entered here at the close of that candle, and so far so good. I'm not moving my stop because I'm trading a mechanical strategy, a system-based strategy that's been tested, has produced results for years in and years out. And of course each decision in this setup is taken with backward data, justified by data. So the reason I'm not moving my stop is because this strategy sometimes takes on quite a bit of time to get to my target. It can take up hours and hours, and we do see the retest of these areas. Sometimes price gets back to my entry, it gets even close to my stop loss, but then bounces back and hits my target. So there's historical data and statistics to back not moving my stop. For this particular strategy, I'm not against moving stops in general. I think they're great, and especially if trading discretionary, you want to move your stop. Although I have a mechanical strategy, but if the rules are all ticked off my chart, I have to take an entry basically, regardless of how I feel about price action. But then I have extra confluences to better fine-tune the strategy. For example, structural adherence is very important to me. But my trading model that I'm trading right now is basically built on it's a breakout strategy. It's not a momentum strategy. So it's a strategy with which you call breakouts, and you know that breakout strategies can have a lower win rate compared to momentum trading strategies, but they can have higher returns. So how do I feel about this trade? I know if you see money, take money. Most people will do that. Are we already up more than 1 hour? Most people would take this out. If this was a discretionary trade, I would have been thinking about moving the stop, taking some of it off, maybe taking 2 contracts off, letting another 2 to run. But since this is not a discretionary setup, I tend to just keep my feelings out of the trade and just spectate. As soon as I enter the mechanical entry, I just watch. That's my job, just to watch. But if I analyze this discretionary, right, I'd still feel comfortable holding this trade, since we failed to take these highs, clear rejection from this line, not once but multiple times. structure narrowed down. Again, every time structure narrows down to a certain direction and has clear points of resistance, the structure is going to break. So the only job as a discretionary trader will be to predict the direction of the break. In this case, bearish, downwards. So this would have been a trade I would have taken discretionally as well. If I had been watching this line, getting price being rejected at this line multiple times, and then price also narrowing, ranging with very little movement, very little decisiveness. This is what I call the narrowing of structure. Whenever structure narrows like this, it's going to break. And it's not difficult to see the direction of the break, especially if you have something like this. If you have failed to take the highs, this break is most probably coming to the opposite direction. So as we see, price is getting closer to my TP. When I first started trading, whenever price came close to my TP, I would really get nervous, and I would move my TP up just so I can close the trade earlier, just so I'm out of it as soon as possible. I'd give up 100, 200 per trade just to get out of the trade as soon as possible. But obviously, the more you trade, the more you refine your strategy, the better you get at trading psychology, the better you handle it. Now, if I would, in my first year trading, I would definitely close this manually. Definitely. And by the way, that's not a bad thing to do, because what's the difference? Like barely $40.
Order filled.
There you go. Don't have to do it. Whenever price is confirming your buyers with such strength, such movement, zero drawdown, every single candle works in your favor. You don't have to touch that TP. You don't have to.